Well, amidst the pandemic and due to the pandemic enforced lockdown, one particular, and it's a very surprising development, that one particular section of the market, of the equity market, has seen a significant surge as far as volumes are concerned. Now, the phenomenon that we're talking about, in the USA, it's been called, or it's been touted as the Robin Hood phenomenon. Now, what exactly is happening is that the retail population, now the retail population typically consisting of salaried workers, and even though salaried workers, some of them have been, seen quite a bit of wage cuts, some of them have been out of work. However, the salaried workers who are now forced to stay at home, forced to work from home, and due to lack of any kind of social connect, or due to the imposed social distancing norms by the governments, by the state as well as central governments, a lot of these salaried executives have actually taken up to daytime trading and have also taken up to investing. Now, this particular phenomenon has played itself quite spectacularly across the globe, and especially so in India. Now, let us look at some data points that actually supports this particular thesis. Now, when you're talking about the pandemic enforced or induced lockdown, the retail population, or the non-institutional shareholders as you call them, the percentage of volumes on the NSDL as well as the CDSL, these particular clearing sites, have actually reached up to 70%. Now, this is more than a decade high in terms of the retail participation as far as equity markets are concerned. Now, the earlier time when you actually saw such a high participation was in early 2000s, and this is when participation was over 90%. Typically, when on an average, retail participation in volumes as far as NSDL and CDSL is concerned is much lower, a little lower than the 50% mark. So what ET now has done is we've compiled a list of companies, a list of stocks that are actually beneficiaries of this particular trend that has emerged. So the first list of beneficiaries are clearly the broking houses. New accounts have been opened, more volumes being seen, a lot of participation as far as retail population concerned in terms of increasing wallet share. So IIFL Securities and ICICI Securities, Motilal Oswal, 5 Paisa, these are the names, listed names. Even names like Zeros, I have seen a significant amount of surge as far as retail participation is concerned. Now, second level beneficiaries, you will see volumes going up as far as NSE is concerned, unlisted player, but BSE, CDSL, and even MCX for that matter, a lot of participation even being seen across commodity markets. So BSE and CDSL are seeing higher number of clearing, higher number of accounts being opened, a lot of volumes, and again, this is something that aids the business model of both BSE as well as CDSL. You're also talking about some of the third level beneficiaries. So a lot of the companies that are actually providing data, so tertiary beneficiaries may be not too impacted, but in the larger scheme of things, important to note them as well. Reliance Jio, or Bharti, and Idea, and even a Tata Communication for that matter, all of them have benefited quite significantly from this particular development, that is the work from home or the trading from home syndrome that you are seeing as far as equity markets are concerned.